Hi, and welcome to another IRS Forms video. Today we're covering IRS Form 433. With 6 different variations to choose from, choosing the right type of 433 for your client's current situation can be a challenge. Luckily, the 433 series can be broken down into 3 separate, easy-to-understand groups. Let's take a quick look at each of these groups and how each type of 433 should be used. Type number 1, the 433D. This one is pretty easy. You, the tax professional, will rarely, if ever, initiate filling out IRS Form 433D. This form is used exclusively to finalize the terms of an installment agreement and is typically used in conjunction with Form 9465. A revenue officer will generally initiate a 433D after you have contacted the IRS about an installment agreement and have either come to a verbal agreement or have had your 9465 accepted. If you want to learn more about installment agreements and the 9465, we've linked our video to that form in our comments below. Type number 2, the 433A, 433B, and 433F. These 433 forms are traditional financial statements that can handle more complex issues than the 433D. Most types of financial requests of the IRS, such as currently not collectible status, installment agreement requests, and installment agreement adjustments, will require that you submit a 433A, B, or F. These financial statements are often submitted in addition to other forms, such as a 9465 in the case of an installment agreement request. At 2 pages, Form 433F is a simplified financial statement designed to handle clients with straightforward financial situations, typically wage earners without much in the way of investments or significant assets. Forms 433A and B, on the other hand, are much longer and more comprehensive financial statements for individuals and businesses, respectively. Forms 433A and B ask for much of the same information as the 433F, but in much more detail. For instance, take a look at the difference between the assets section on the 433A versus the 433F. When you're working with businesses, you'll obviously have to use Form 433B. When working with individuals, use your best judgment when choosing between Form 433A and 433F. You need to provide enough information to satisfy the IRS and effectively make your case, but sharing more information than necessary may hurt your case more than it helps. We're definitely not suggesting that you should ever hide or misreport information to the IRS. What we are saying is that you shouldn't give the IRS more information than they need to make their decision. When in doubt as to which 433 to use, start with Form 433F. You can always provide more information if the IRS asks for it, but you can never unsubmit information to the IRS. Type 3, 433 AOIC and 433 BOIC. Lucky for you, not all your 433 related decisions are as complicated as choosing between Type A and Type F. If you're preparing an offer and compromise, your choice is easy. For business clients, you'll use Form 433 BOIC. For individuals, you'll use Form 433A OIC. Similar to their non-OIC counterparts, these 433s are a comprehensive look at your client's assets, including bank accounts, real estate, cash value, insurance policies, vehicles, investments, and more. In addition, the OIC 433s also have a section dedicated to helping you calculate the minimum offer amount that the IRS will accept. Well, that's all we have for you today. Make sure you subscribe to our channel if you want to see more of our content like this. Also, be sure to let us know in the comments below if there are any other IRS forms you'd like to see us cover. We'll see you next time.
You know what's easier than watching form videos on YouTube? Letting Canopy fill out the forms for you. Click now to get automated form filling with your free trial of Canopy.